Good morning. Welcome to Money Matters. My name is Nev, and welcome to another beautiful morning. We are broadcasting live, as always, on onedealaway.com. And I am beyond excited that you are here. We're going to be having quite a bit of interesting show of learning a bit more about not just sort of what's going on in the market, but like how do we use some of the stuff that we're seeing and how do we protect ourselves in this particular market and economy. We are going from a bubble to a bubble, and it sounds like the bubbles are not stopping. They're only getting bigger. The problem with bubbles getting bigger is that all bubbles eventually pop. And the bigger it is, the more explosive the pop is. And so, what does that mean for you and I? How do we protect in this sort of economy where, Fed sort of backs up everything and buys everything? Bankrupt companies are allowed to issue shares and basically fool the public and steal their money legally, but they're stealing nonetheless. I don't know that it should be legal, but it is. Right now, the way that the laws are written, there's nothing against it. All of those and more coming right now. All right, so here we go. Let's go and get started. I have been on the Hertz train for a while because a lot of the things that they're doing doesn't make sense. And my challenge with the whole thing is that they're taking advantage of people, and that's really where I struggle with the whole thing. And so I want to use that as an opportunity for all of us to learn, to understand of what's going on, and of course, how do we protect ourselves and our money. So I've pulled a lot of information about what's going on so that we could sort of use it as this case study to be able to learn from it and understand how some of these bubbles and manias and panics and that kind of stuff is created. Because I think it's important and it plays out not just in Hertz, it played out in the dot-com bubble. It played out in the real estate bubble, and now it's playing out in this sort of, markets completely decoupled from what's happening in the economy. We still have tens of millions of people who are unemployed in the United States. We have negative expectations for quarters and for the year as far as the GDP. We're printing money like never before, meaning every dollar that we have has a potential to actually buy less and less because of the whole supply piece. Now, there's also another problem is that the amount of debt that is being held and owned and created outside of the United States is also ridiculously high. And the only way that it can be paid is with U.S. dollars. So there's a shortage of U.S. dollars that is happening, and part of it, some of this printing should be going to meet some of that shortage. However, if they miss the mark, now we could potentially be looking at the inflation sort of not just reaching that 2% that they have been wanting, but surpassing it as well. So there's a lot of things that are happening, a lot of things that are developing. And so I want to go in and let's go in and have a conversation about Hertz. Again, not meant to beat it up. None of this is financial advice. All of it is really meant for us to be able to learn and understand what's going on and why. All right, so here we go. Bankrupt Hertz gets approval to sell up to 1 billion in stock, but experts expect equity to be wiped out. So we've already covered that Hertz basically has filed for bankruptcy in May. Right around that time, of course, that price dropped. One of the biggest investors, probably best known investors, Carl Icahn, actually dumped quite a bit of the stock right around there when it was announced. However, an interesting piece went is that they filed for bankruptcy. Then, next thing you know, is that their price started to go up. Well, what happened? Well, the Robinhood investors started jumping in, and we're going to be able to see all of that stuff. So right here in this article, they're basically showcasing and saying bankruptcy, right, approved, and but so this is kind of what happened, right? This is what the price was. It was sort of going this. Then they filed, right? They crashed, but at some point, right around here, when they crashed, the number of people getting into Hertz using Robinhood has gone through the roof. Now, of course, when that happens, when you have the surge in demand, but supply more or less stays the same, the price, of course, has to go somewhere, only one direction, and that's up, right? Now, they're saying that, when they were writing this article, they were saying that the Hertz was still listed as the number one sort of stock to buy on Robinhood. Now, I went in and checked it this morning. That has actually shifted, and you will see that Hertz is actually number 10 now. It has lost some users since last time, right? Like in the 24 hours, right? So that's kind of where it was. So it lost about, I don't know, just under 4,000 users, but it's still well over 160 some thousand people that are holding on to this thing. So what ended up happening is that, right after all of that happened, because the price dropped, because of all of this stuff, then Hertz received a delisting notice from New York Stock Exchange. We've covered all of this stuff on this particular channel. Now, I wanted to go in and show you where you can find what does delisting even mean, right? We covered it a little bit, and I tried to make this bigger, but when I do, this is what happens. You will notice, hold on in just a moment, it sort of overlaps, so you can't like see it. So I apologize, but we're going to have to do this. And now it's going to be like a weird video thing trying. But anyways, what ends up happening is that, of course, some sort of something happens when a company goes through the bankruptcy. The New York Stock Exchange shows the delisting. Then the company has an ability to sort of file a paperwork, and if you're seeing the form called AK, that's the form that they have to file. So that's what you'll see in some of these reports and news articles when you read it. Of course, the Hertz is filing for an appeal, but appeal, right? So each exchange has an appeal process, and New York Stock Exchange has a 25-day review. Now, my understanding is that this delisting thing was announced first half of the June. Well, duh, first half. We're still sort of we just reached the second half now. Thanks. Uh, I want to say it was like June 8, 9, 10, something like that. Anyways, early June. So 25 days puts us to early July to make a decision. Okay, so that's kind of where we are now. What they're saying is that the people are looking at this stuff and saying, we're expecting eventual equity value of all of this stuff will be zero. Investors eyeing Hertz might be some of the same who are buying the deep value penny like stocks on Robinhood, but that's not investing, that's gambling. And if that's what you're doing, cool, but at least understand what you're doing so that you have a clear understanding of what's going on. Now, Hertz stock has nearly tripled in June and gained 10% this week. Stock fell around 3% in extended session on Friday after the court decision's news, but ended the regular trading day up 37%. Recent average volume has been more than 16 times the volumes before the filing. So that's crazy, right? Like it just jumped so much, and it shows you that the only interest is individuals who don't know necessarily how to evaluate stuff. So we want to go through some of that stuff to understand things right now. Now, Hertz mostly widely traded October 2022 corporate bonds were changing hands at an average price of about 40 cents on the dollar on Friday. That basically means is that, well, highly distressed, because bonds are often considered distressed once they trade below 70 cents on the dollar. We think that this deal would be more robbing from the misinformed to give to the senior secured. All right, what does that all mean? Like, how does all of that work? So they basically were going through bankruptcy, filed for bankruptcy, noticed the delisted, price went down, all normal, all supposed to happen. Coffee time. But then, whether people followed somebody My understanding is that there's a gentleman that owns a gambling company that is posting all kinds of like wins and woohoos of like what's going on with the stock market that a lot of people are starting to follow. And so I don't know if that's the cause. I have no clue why or how. But, anyways, people started jumping in. You saw the graphs. They started buying. The price started to go up. Hertz thought to themselves, well, we're dealing with all of the people that we owe money to, the creditors, right? That we have to pay somehow. We're not making money from income because there's not much going on, there's not much happening. So we're losing. We owe money to everybody and their grandmother. Brilliant idea. Why don't we go out and ask for bankruptcy judge to give us an ability to issue $1 billion worth of stock? People are buying, they're going to buy, we're going to make money from it, and we can actually use that money to pay our creditors. The creditors, because it's a bankruptcy court, would have to sort of say yay or nay, and they're going, well, yeah, we're gonna vote yes, because if we're gonna get paid out of this whole thing, heck yeah, we're voting yes. So the bankruptcy judge approved that stuff, and now Hertz is actually going to be listing about half of that onto the stock exchange. Um, that's at least my understanding of what I was able to gather. Now, if my understanding is incorrect, please do correct me. Please do set me straight, as they say. Do it in the chat, or if you're watching this on YouTube, put it in the comments. By the way, if you're watching this on YouTube, you're missing the live show, which may or may not be a big deal for you, but a lot of times we do some things here early in the morning that gives you an ability to act and react well before everybody else. So when a herd comes in behind you, it helps you. That is the reason why we do it at 7 a.m. only on onedealaway.com. So I highly, highly, highly suggest and invite you to come join me live so we can also chat and interact, answer questions, and so on. But I understand not everybody's an early bird, and it doesn't work for everybody because of the time zones that people are in. So if you're on YouTube, do make sure you hit the subscribe button and give me a thumbs up. So if you like the show, of course. So hit it up. And thank you in advance. So, anyways, so that's kind of what's going on, right? So now, when that all happened, right? When they had filed and stuff for it, let's switch over to kind of what happened with the stock. Now, this is one day. We're gonna go to the month because that's all we have, right? So this is when they had filed. This is when they had gone down, and then it sort of started to go. And I know this is not the best chart, but it's a chart. So it kind of jumped up a little bit, then it started to go down, and then it just sort of picked up steam, hitting the high of 5.53 US dollars. Right around this time is when they decided, well, wait a minute, there's crazy people out there buying this stuff that none of us believe is worth anything. Okay, so let's release it. So now they're releasing more stock to go down. Now, since then, it has dropped down. Okay, and then Thursday everything went down. Friday they were back down. They were back up. Monday they went back down, but it's starting to pick up steam on Tuesday. And so it's going to be interesting, but it looks like, this is kind of what ended up happening. You can watch it right here of what's been going on. So what happens when new shares are being released is that the stock is actually, the shares are diluted, right? So the value in that share, right? Because now we're talking supply demand again, right? Whenever you sort of start thinking of that, just go back to the supply demand and what's going on, the basic stuff of economy. Now, when the number of the shares goes up, all of those stocks and shares get diluted, right? So this is the part when I said, well, the news sort of another article that kind of helps explain some of these things. So what they're saying is that they were approved to issue up to 246 million new shares. However, Hertz currently has roughly 142 million shares outstanding, meaning these are the shares that are not being used. They're just waiting out there for somebody to buy. Stock offering will not only cause dilution, it will add interesting pressure to the stock price on the down end, right? One theory behind stock speculative rise was a short squeeze, and when a surplus of shares are added, it could effectively end the short squeeze by allowing new short sellers to put in the new short orders. The stock is likely going to zero, which is why everybody who's going in the shorts is going, this is a short deal, so might as well just go in and bet that way. So that's kind of what's going on. Now, they're saying, now what? Well, the path of herd stock over the past few weeks could be described as a slow motion train wreck that will almost certainly end in its common shares and become worthless. New York Stock Exchange notified Hertz that it will be delisted, a decision that the rental company is currently appealing. And as we just discussed here moments ago, that decision won't be finalized until end of June, early July. So we are here. It's July. It's June 17th. It's not July yet. It's June 17th. So that's kind of where we are now. The Hertz stock volatility with take Hertz stock volatility with a grain of salt, and also with understanding that some traders are playing a dangerous game, buying and selling shares that are likely to end up with no value. So the reason that people are saying it's not going to end, it's going to end badly and have no value, is because when a company owes money, they first have to pay the creditors, meaning the people that they owe money to. So that's bondholders that get paid first, not stock investors. Okay. Common shares are sort of the last group of people in the order that get paid if there's any money. Now, when you invest in a healthy company that is producing revenue, that is doing really well, then the risk of that common share sort of going bust is, it exists, but it's not as high as a company that has filed for bankruptcy, that is going through the bankruptcy proceedings, that is being delisted, that is adding more shares. All of that is crazy and should be illegal, but it's not. Excuse me. And when money, any money that is left from it, so if they make any money from the stocks and stuff, if they start doing some business, or if they're able to sell some cars, if they're forced to sell cars, money that is collected from that goes to the people that hold on to the debt first, then it goes on to the preferred, and then it goes to the common shares. What they're releasing, what people are buying, are common shares, which is the shares that more likely than not will not receive any money whatsoever. And if Hertz actually gets out of the bankruptcy, which is possible, many companies have gone through it and have sort of restructured and gotten out of it, and they issued the brand new sort of ruling of the stock, as we've covered in one of the previous episodes, then that new one sort of takes over and the previous one goes to zero. So whichever way you take it, that stock is going to zero. And the fact that people are buying it is insanity. Now, one of the other pieces that I wanted to share with you is also from Monthly Fool, and it's basically saying know when to follow. Okay, so I want to kind of highlight a little bit of this whole piece. In one of the more crazy developments in the market recently, after one of the world's top investors, Carl Icahn, sold his nearly 40% position at a staggering loss, shares of Hertz soared from May 26 lows of 0.41 per share to a June 8 close of $5.53 per share. The move was absolutely baffling, and CNBC's Jim Cramer put it bluntly when warning investors, quote, "You may think a stock like Hertz or Chesapeake Energy looks like a steal at these levels, but the only people being robbed here are you, the buyers." Kramer continued, "Believe me, if there was a real chance of the common stock would be worth anything, ICANN would have stuck around. He didn't." Further, you can see in the graphic below how investors have opted to own shares of Avis Budget Group as its share price puts distance between itself and the stock price of its competitor. and you can take a look and notice of what's going on. Okay, so you can see Hertz is blue, Avis is orange, and there is S&P. Okay, and they're in the same sort of ruling. So this is another piece that I always keep saying is some of these people, like Warren Buffett, people are bragging like, "Oh, Warren Buffett is an idiot. Look at me making money, but he's not doing anything." No, 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 no. This is such a crazy market. It's so bubblicious that everybody who's long-term serious about it, it's standing on the sideline, right? It's kind of like you're able to see. You know how sometimes, see if we can put this in an analogy. You know how sometimes you're able to go in and you see an accident is about to happen, right? And it's almost like a slow motion where you see it. There's nothing you can do to prevent it, right? There's nothing you can do to like warn it other than like maybe yell or scream or whatever. And it's two cars going at each other full speed. So you, even if you had time, you could, I guess, jump in. But why would you? Because you know what's going to happen. That's what these folks are doing. They're seeing what's about to happen. Again, nobody has a crystal ball, so everybody's going off of more likely than not, given what I have and information that I have and things that I'm reading. That's the reason why they're sort of standing on the sideline. They're not idiots. These people didn't get rich and stay rich for decades because they're idiots. They might have gotten lucky once or twice, sure. Even they will tell you, yeah, there were times that this was definitely a luck more than intelligence. But more often than not, making money is one thing, keeping your wealth is a completely different ball game. And the rules, if you get lucky and make money, like lottery winners, right? Like we all know lottery winners, they go out there. I mean, I don't know if we all know them, but like we've heard the stories where they go out there, they make all of this money because the lottery hit them, they hit the jackpot, woohoo, everything is great. And then only a few short years later, they're just as broke or broker than prior to the lottery, right? And the problem wasn't necessarily because they didn't have money, is that they didn't know what to do with money intelligently with it. So that's the reason why I say making money is one part of the game. The second part of the game is keeping and growing that money. So, if you're thinking that, you know, I opened the Robinhood account like 2 days ago. Look at me. I'm smarter than Warren Buffett and Carl Icahn. I don't know about that. I honestly don't know about that. Maybe you are. I don't know you, right? So potentially. But I'm just saying is that these people have been in the industry for a very long time. They understand the manipulation. They're the insiders by this point. And so, if they're basically going and saying, this is wonky, I don't want anything to do with it, what makes the rest of the individuals think that they are smarter, right? Now, here is the final sort of article that I wanted to share with you. This is from CNBC about Hertz. And the regulators basically saying that they never thought investors would be gullible enough to buy Hertz garbage. Hertz garbage, not stock, garbage. Now, unfortunately, he's saying the investors, I would say speculators and gamblers, but that's just me. Okay. So, again, we all have a right to our own opinion. So, what he's basically saying is that the former top securities regulator for the United States said Tuesday the policymakers never considered there would be a market for bankrupt companies like Hertz to issue new stock, and that if things went poorly, investment banks could be on the hook. Investment banking firms have liability, and when they offer securities, one of the issues that will come to bear is whether these investments are suitable. The company decided to take advantage of the interest by issuing $500,000 worth of new stock. In its filing for the new offering, Hertz said, quote, we expect that common stock holders would not receive recovery through any plan unless the holders of more serious claims and interests such as secured and unsecured indebtedness, which is currently trading at significant discount, are paid in full. Now, what they're saying, what the individuals are saying here, the disclosure should have been made way stronger. but it didn't, right? It's sort of like, yeah, we expect this unless all of these things happen. So it was sort of the disclaimer, but not really. It wasn't strong enough. The disclaimer should have been, this is trash. We don't recommend you buy it, but we understand that some people's trash is another person's treasure. So if you want to buy it, you can. That would have been a more honest way to do it. But then again, now people are saying, well, the court allowed it and the SEC allowed it. So if they're allowing it, surely it's a good thing. It's not. It's not. The court allowed it because, if the two parties agree, the court is not allowing whether that's a good deal for the public, for the buyers of the trash, of the garbage, as they called it in this article. The court is basically deciding and saying, do both the plaintiff and the complainant, or whatever the names are, I could be making it up, do they agree to what they're going to do? And if the answer is yes, they agree, cool, you know, approved. So they did agree. That's how he got approved. The SEC does not have legal power to stop a stock sale ahead of time, right? So when it goes out and they're about to sell it, SEC can't do anything. So of course it's going there. And here is an interesting piece. An intellectual proposition, more securities experts had always thought you could offer garbage for sale to the public as long as you said, quote, we are offering you garbage and you really shouldn't buy this, but you have a chance to buy it. No one really anticipated that people would be gullible enough to do that. Folks, come on. Wake up, wake up, wake up. Please, please wake up. I am sending this again. I don't have anything against herds. I don't have anything against people making money. I get giddy when companies and people and countries make money in a legal, ethical, moral, and legit ways. Okay? But here's the other part of it. So, final piece is, let's take a look, right? So, we're saying all of the news analysts are wrong because, that's fake news. You don't want people to win. Fine. We're saying all of the warnings that is happening and people are reporting and stuff and reading of the articles. All of that is, yeah, whatever. You don't know what you're talking about. Let's take a look at what insiders are doing. These are people that are actually inside of the company that are, being paid or holding on to the shares or whatever. Let's take a look at what they are doing to inform us of what we should be doing. All right. So, Insider Monitor, we're going to go scroll down. Obviously, you're seeing that we are doing this right here, monthly summaries of insider stock purchases, sales, and option exercises for Hertz Global Holdings. So that I'm not making it up. You can see it right here. You can see the trading period right over here, 2020, right? You can see the shares of buying. So, do you notice something interesting that is happening in the 2020? Let me highlight it for you. Let me see if I can actually, let's do this. Let's see if I can highlight it. No, don't highlight everything. Okay. All right. There you go. So you can see the highlight piece. All right. So what you will notice is that in March, there were some insider buying, right? They were buying in March. May, there was zero buying. Look at the amount of sales, y'all. $39.8 million. Million dollars that was sold, and then additional were sold is 71,000 shares in June. Now we're still in June, but thus far. Now let's take a look at, for example, 2016, which you can see down here. And what are you noticing? Well, there was quite a bit of buying. There was some selling, not much happening, right? 2017, there were some sales, not much of anything. Option exercises, a few. 2018, some buying, some selling, some option exercise. 2019, again, there was no buying, but there was like a little bit of selling and some option exercise. And here we're basically just seeing sales, right? Like it's being dumped. It's being dumped. And then furthermore, what you can do is you can also get a detailed insider look of purchase, sale, option exercise, and that kind of stuff. and look at it. And so you can find out of who these individuals are. So you will see what's going on and who is actually doing what. And you will see, look at this, sale, 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 sale. Like everybody is selling, y'all. Okay. Now, there's a little bit of buy that happened in 2020, and you can see who it is, right? Carl Icahn, and that was in March, only to turn around and basically dump a bunch of it in May. Everybody else has been selling, okay? So I want you to understand this stuff because they're able to see things that we are not able to see. They have way more information than anybody on Twitter or Robinhood or any of that stuff. And Robinhood doesn't give you much information at all, if any. The company's earning per shares are negative. The income is negative. I mean, news are negative, but people are still buying it because of the lack of understanding. And my goal here really was to spend pretty much the entire episode to talk about why you need to pay attention and why this is a very dangerous game and why people are saying, you keep on playing with this, you will get burned, you will get hurt. So that's basically what I wanted to share here with you. I wanted to spend time really educating folks and explaining some stuff so then the hopes that maybe people will wake up and they will say, I want to spend a little bit of time on learning about these things rather than just throwing my money at something, hoping and praying that there's a greater fool that is going to come behind me, buy it at a higher price so that I can sell it and make some money. Matter of fact, I think you need to figure out the way of how can you make money without having to sell an asset. Because when you sell all of the assets, what then? I mean, yeah, sure, you made some money, but when you spend all of that, now what? Are you going to have to go back and try to find something else and hope that it goes up in price so that you can sell it? Are you going to go and have to get a job so that you can make money again? I think that the whole methodology of how the mainstream education and the media system has been teaching us is to go and buy, hope that it goes up in price, then sell just so that we can make money. I don't know that that's the right way to do it. I mean, sure, I'm okay with things going up and the underlying assets going up in price. But I think that being able to actually monetize the asset, meaning make income from the asset, is the key component. Now, we used to be able to do that with our money, right? With our currency. We were able to do that because you could save it, you would put it into the savings account, and the savings account would give a strong enough yield where you actually could live off of that, right? And that was really cool. You never had to go into that savings and spend it, right? And you would buy stocks that had dividends that maybe would go up in price, but the dividends ended up paying you quite a bit. Now, what we're seeing is right now is that we're seeing that our savings, I mean, if they pay a tenth of a percent, right, is a big deal and they brag about it. The stocks, more and more of them are reducing the dividends and many of them foregoing them altogether these days so that you're forced to go in and gamble. You go in, you can buy, the debt that is being backed now by the Fed. But if you go with the sovereign debt, right, like the country's debt, uh, the return is close to zero, right? So it's almost as much as the savings account. So that's not enough. But he has higher rate of probability that it's going to pay you back. Corporates, vast majority of them have gone to junk, and junk is junk. It's same thing as garbage, and it has a potentially a bit higher yield and the Fed backing, sure, um, but it has a high probability that it's not going to pay you, that it's going to end in the land of too bad, so sad, you don't get your money. So that's too risky, right? Well, what does that leave us with? It doesn't leave us with a whole lot. For me, when I look at all of that stuff, it leaves me with a handful of things. Number one, education so that we can get better at how do we solve those problems for ourselves. Number two, starting our own business and figuring out how do we do that stuff. But you need education for that as well, right? So it brings it back right back to the education. Investing in real estate, physical real estate, I think has great potential because it has ability to kick off really good passive income and cash flow, which is huge, and that's the part that's important. But for that to do that well, you need education as well for that component as well. And then there's, of course, the brand new asset class of cryptocurrencies that has a potential to go up as well. But there's a thing that is developing within the crypto world, within a blockchain world, that is called decentralized finance, that allows you to start generating passive cash flow from digital currencies. But for that too, you need a bit of education. So, bottom line is no matter what the problem ends up happening, the solution to it sounds like to be a bit of education. So that's the piece that I really want to leave you with is spend some time learning. Now, of course, One Deal Away is an education company where we're sort of teaching people how to do some of these things and roll it. If you're interested in doing that and you want to learn from it, I invite you to come and check out the Academy. Right below this video, for those of you that are watching this on YouTube, you're going to see a link for the Academy and you can go and check it out. It's all of the courses we've ever created and that we're going to create that are going to live there for everybody watching live. It's actually right underneath the feed where the link is, so you can go in and join right now or tomorrow. But hey, there's never a better time than right now to learn and protect ourselves because these bubbles that we're seeing, they're going to blow up, they're going to explode, and there's really no stopping it. And while Fed potentially could go out there and buy everything, once they own all of bonds, all of treasuries, all of stocks, and there's nobody else buying, then what? What happens then? At some point, the music will have to stop. We don't know what that point is, but it will have to shift and change, and drastic changes within our financial system will have to happen. The complete overhaul will have to happen, and not just in the United States, but around the world. What that exactly is going to look like, I don't know. I don't think anybody does. But I think vast majority of people are starting to agree that a big change, a big shift will have to happen in our world when it comes to many things around our society and how we run and how we operate and how we think and how we work, but also inside our financial world. So that's the part that I want to leave you with. Spend time studying. Thank you for watching. Do hit the like button. Do subscribe. Do show up tomorrow. And by the way, tomorrow we're actually not going live. That reminds me, I'm actually taking a few days off. I got to go and do some work. I got to travel. So, and which means no internet. So I got to go travel, doing a bit of a retreat. So that means it's me, my thoughts, and the earth. Probably a book and some notebook, but I will have videos prepared for you every single day, showing up like clockwork at 7 a.m. so that you can still continue to learn, continue to study, even while I'm gone. So make sure you come to onedealaway.com/live. You can watch the videos there, or you can just watch them on YouTube because they're going to upload as we progress through the day. So every morning you will receive a brand new video going over things, teaching, explaining, and hopefully helping you preserve and potentially grow your wealth. Thanks for watching. Until next time, stay forever money blessed. And do remember, you are only one deal away.